Hi neighbors, welcome to the January 2022 market update. We're going to look at how the Jefferson County real estate market did in the whole year of 2021 compared to 2020 and also 2019 because 2020 was such a weird year. So, on average, it took 27 days for a property to sell in 2019. That improved to 22 days on average in 2020. In this past year, it took on average 14 days for a property to sell. In 2019, the average sales price in Jefferson County was $256,000. In 2020, average sales price increased to $276,000. In this past year, the average sales price increased to right at $300,000. In 2019, 13,262 properties were listed for sale, and 63% of them ended up selling. In 2020, there was a small decrease. 13,030 properties were listed for sale, and 69% of them ended up selling. This past year, we went up again. 13,145 properties were listed for sale, and 74% of them sold. So, an increase in properties listed for sale and also a steady increase in the percentage of them that ended up closing. And then in 2019 and 2020 both, on average, properties sold for 98% of their list price. In 2021, on average, properties sold for 101% of their list price. So that's the big picture of the Jefferson County market this past year. Now, I'd like to answer a question that I get almost every day, it seems like, and that is the market going to crash in 2022? It comes down to an issue of supply and demand. Demand, we're expecting in 2022 to remain strong. Interest rates on average right now are 3.1% nationally. We are expecting them to rise slightly, but not dramatically. So, there's no expectation for demand really to change dramatically next year. The flip side of the equation is supply. For multiple years, we've had essentially an inventory crisis. So for the market to change dramatically, we need a dramatic change in inventory. Now, new construction sales are not going to be able to meet this gap in supply. High-level analysts are basically saying it's going to take more than a decade for really high levels of new construction to meet that gap. So it's not going to come from there. A lot of people were curious if the issue of forbearance might produce a lot of foreclosures to flood the market. And time will tell, but as of yet, that has not produced a large supply of houses for sale. And then lastly, everyone's always paying attention to how exactly will the COVID-19 shutdown affect the real estate market. There has been more turnover in terms of people staying in their homes for a shorter amount of time, but all of those sellers also become buyers. And so we're really not seeing any glaring sources of inventory to flood the market next year. So supply and demand are probably going to change slightly, and it's going to amount to demand remaining really strong, a small increase in inventory, and so for the most part, the market's going to stay about as hot as it is and hopefully become a little bit more balanced in 2022. We'll see what we say this time next year, but no one has a crystal ball. That's kind of the expectations at this point. So I hope that helps. I hope y'all all have an amazing beginning to your year, and we'll talk soon.